The US dollar has long stood as the dominant currency in global markets, a symbol of stability and strength. However, in recent years, cracks have started to show. With inflation at levels unseen in decades, growing national debt, and geopolitical instability, the future of the dollar is now more uncertain than ever. In a world where currency devaluation can happen swiftly and without warning, it's crucial to ask yourself, how can you protect your wealth against the potential collapse of the dollar? One of the most effective strategies is insurance. In this video, we'll explore how various insurance products can act as a hedge against economic collapse and safeguard your financial future. A dollar collapse may sound extreme, but the factors leading up to such a scenario are very real. The national debt has surpassed $33 trillion, while inflation continues to erode purchasing power. Globally, countries like China and Russia are reducing their reliance on the US dollar, creating potential for shifts in the global economic balance. Imagine a scenario where hyperinflation makes everyday goods unaffordable, or a major geopolitical conflict disrupts the financial system. A sudden drop in the value of the dollar would wreak havoc on savings, investments, and pensions tied to the US economy. While it may seem unlikely to happen overnight, history has shown that currency crises can occur swiftly, catching even the most prepared off guard. So, what can you do to protect yourself from this kind of financial upheaval? In times of financial instability, many people focus on investments like gold, real estate, or foreign currencies. But one often overlooked tool in your financial toolbox is insurance. Insurance offers more than just protection from life's typical risks, like accidents or health issues. When structured properly, it can provide a stable hedge against economic downturns and currency devaluation. For example, some life insurance policies come with cash value components that grow over time. In this sense, they act like savings vehicles, but with the added benefit of tax-deferred growth. If the dollar depreciates in value, the cash value in your policy may still hold steady, especially if it's denominated in stable foreign currencies or tied to inflation-protected investments. Another advantage of insurance is its legal protection. In many jurisdictions, the cash value in life insurance policies is protected from creditors, making it a valuable asset even during an economic collapse, where bankruptcies and foreclosures may rise. Now that we've covered the basics, let's dive deeper into the specific types of insurance that can help hedge against a potential dollar collapse. Life insurance is perhaps the most straightforward way to protect your wealth in uncertain times. Specifically, whole life and universal life policies can build cash value over time, which can serve as a buffer against inflation. Unlike term life insurance, which only provides a payout upon death, these policies accumulate cash value that grows tax-deferred. Think of it as a hybrid between traditional insurance and a long-term savings account. Some policies even allow you to borrow against the cash value or withdraw funds during times of need. This liquidity can be invaluable during periods of financial stress. The best part? The cash value of these policies isn't directly tied to the US dollar's value, meaning that it could still retain its worth even if the dollar loses value. For example, a policyholder who took out a whole life policy decades ago may find that their policy's cash value has grown substantially, even if the dollar's value has diminished. In this way, life insurance can provide both security for your loved ones and a financial safety net for you. Historically, precious metals like gold and silver have been go-to assets during times of economic distress. When currencies lose value, gold tends to rise in price, acting as a safe store of value. But did you know you can also insure your gold and other precious metals? Insurance policies specifically designed for precious metals can provide an additional layer of protection for investors. Imagine you've invested heavily in gold bullion or silver coins. While these assets can help protect against a declining dollar, they're still vulnerable to risks like theft, fire, or damage. A specialized insurance policy ensures that the value of your precious metals is protected no matter what happens to the economy. In times of financial collapse, the value of these metals might soar, making insurance even more critical. Real estate has always been considered one of the safest long-term investments. While property values may fluctuate with the economy, real estate remains a tangible asset that doesn't lose value as quickly as paper money can. Property insurance plays a crucial role here, ensuring that your investment is protected from physical damage, theft, or disasters, regardless of what happens to the dollar. If the dollar collapses and inflation skyrockets, owning property could become a strong hedge against currency devaluation. People still need places to live and work, so the demand for real estate remains. Property insurance guarantees that the physical asset retains value, even if its dollar valuation changes. Another smart strategy is diversifying into foreign currencies. Some insurance products are tied to foreign currencies, providing a hedge against a declining US dollar. For instance, certain annuity and life insurance policies can be denominated in foreign currencies like the euro, yen, or Swiss franc, currencies that are traditionally seen as more stable. By holding policies in foreign currencies, you essentially spread your risk across global markets. If the dollar collapses, these foreign currency policies retain their value relative to stronger international economies. This provides a built-in safety net that protects against domestic devaluation. Diversification is the cornerstone of any solid financial plan, especially when dealing with potential currency crises. No single insurance strategy can fully hedge against the collapse of the dollar, but combining different types of insurance products can significantly reduce your risk. By incorporating life insurance, precious metals insurance, real estate coverage, and foreign currency policies into your portfolio, you create multiple layers of protection. This holistic approach ensures that if one asset class falters, others can compensate, keeping your wealth intact. While the future of the dollar remains uncertain, preparing for a potential collapse doesn't have to be daunting. Insurance provides a powerful, often underutilized tool to safeguard your wealth, protect your family, and ensure financial stability in any economic climate. Remember, the key is to take action now. By building a diversified insurance portfolio, you're taking crucial steps to secure your future against the unpredictable tides of the global economy. Interested in learning more? Reach out today for a free consultation to explore how the right insurance strategies can protect your wealth from economic uncertainty. Don't wait for the collapse. Prepare now and secure tomorrow.